Hello, everyone, and welcome. I'm Brandon Bormans with the IPC webinar series team, and today we are thrilled to host First Financial Bank for a presentation on financing your pharmacy business. Now, First Financial Bank, they're not just a bank. They speak pharmacy and know financing. Whether you're launching your first pharmacy or expanding, they have the expertise you need. Our experts today from First Financial are Hegi, loan officer and current independent pharmacy owner, and Schwanda, First Financial Bank's managing director. If you have a question, please feel free to submit right here in the chat. It's always nice to get a discussion going, and Drew and Schwanda will be happy to answer your questions at the end of the presentation. With that, we'll turn things over to Drew. Drew, welcome.
Thanks, Brandon. Thanks for the introduction, and thanks to IPC for hosting and having us. We're excited about being here. I'll introduce myself a little bit further. My name is Drew Hegi. I'm located in Jackson, Mississippi, and I am a pharmacy loan officer for First Financial Bank and have been for the last 10 years, originating pharmacy loans for independent pharmacy owners nationwide. And I'm joined by Schwanda Flowers, our managing director. Schwanda, you want to say hello?
Yeah, hello. Thank you, Drew. Thank you, Brandon. It's a privilege to be here. So I'm Schwanda Flowers. I am a pharmacist, a former community pharmacy owner. I am right outside of Little Rock, Arkansas. And then, as Drew said, currently the managing director for our professional services division. So it's exciting to be here. And again, as Brandon said, I would just encourage you guys, if there's any questions, please put them in the chat. Drew and I would love to answer those and be sure we cover everything that you're interested in learning about today.
Absolutely. Yeah, hopefully we'll educate you a little bit about financing in independent pharmacy world and answer any questions, and you'll leave here with maybe some things that you didn't know about lending and SBA and First Financial Bank. So to further introduce the bank, First Financial Bank is based in South Arkansas. We've been around since 1934, so we have a bit of a history. We are a national bank. We loan in all 50 states, and primarily our model is government guaranteed lending. We are a preferred SBA lender. SBA stands for Small Business Administration. It's become more widely known through the pandemic and all the different stimulus products that were put out there for small businesses and different types of aid that were available. But we've been doing SBA loans for well over 30 years. It's a government-backed type of loan, and it's perfect for pharmacies because it helps supplement the lack of tangible collateral, which if you think about an independent pharmacy, you think about your prescription inventory, your pharmaceutical inventory, you think about your shelves, your computers. Really, there's not much else in terms of tangible. You can put your hands on it. From a collateral standpoint, most of the value is in the goodwill or blue sky, which is a lot of local banks will not understand the value there. But on our team, in our pharmacy lending division, we have over 75 years of pharmacy experience. Bob Grawl is on our team. He is a pharmacist. Schwanda, as she mentioned, is a pharmacist. Bob owns stores, Schwanda owns stores. I own different types of pharmacies as well here in Central Mississippi, a community retail pharmacy. We have an infusion specialty pharmacy, non-sterile compounding. We also have an infusion center. So we all know small business and we all know pharmacy, and then we have the SBA expertise as well. Since our history in 2012, when we launched our pharmacy division, we've done well over $250 million in pharmacy loans. We're over $350 million now in our total portfolio. We have a lot of partnerships in the industry. NCPA is certainly one. We are the executive partner for POLA, which is a relatively new organization. It stands for Pharmacy and Owners and Leadership Academy. And it's a week-long boot camp that teaches pharmacy ownership and leadership. And we've been the executive sponsor and partner for that for the last several years. And here at First Financial Bank, we like to say we provide the same one-on-one level of experience for our customers that you do in your pharmacies. So once you get introduced to a First Financial Bank loan officer and you have a loan application, we're going to walk you through the process from start to finish to make sure you understand where your loan is at any given time, you understand all the ins and outs of SBA financing, understand the terms of your loan and how it's going to help your business, help it better understand your cash flow, and all of that is what we provide on an ongoing business. That's a little bit about us. What all do we loan money for? This slide right here specifically sort of points to the main things that we do with our financing. Of course, the bulk of what we do is acquisition financing. So that would be a pharmacist wanting to buy a independent pharmacy. That's probably 80% of the loans that we do here at First Financial. We also do real estate, both buying an existing business or existing building or construction from the ground up. We've done a number of construction projects over the course of our 10 years in pharmacy space, and we have a good, strong offering. A lot of times it's 100% financing for construction deals, 25-year loan terms a lot of times. So sometimes can be even more competitive than the local bank on the real estate in terms of money down and length of term. We do equipment financing, expansion. If you want to remodel your store, if you want to get your store up to compliance and have to do some renovations in that respects, we can help you with that. Business refinancing. If you have lines of credit, if you have existing business loans with maybe a creditor that doesn't have as favorable terms, you could call and we could look at it and see if that's something that we could refinance and put on more favorable terms, which would lower your payment, improve your interest rate, and help your cash flow. We do startup loans. We've done a number of startup loans and continue to do them. We get calls all the time about startup pharmacists wanting to start their own pharmacy. We can't do every single one of them. That is the riskiest loan that's probably out there for us, just because you're starting at zero and you got to go grow the business into something that'll pay the bills. But we certainly are committed to doing startups. We just don't want to put anybody in a bad situation. Don't want to put the bank in a bad situation. So we're going to make sure you've thought about everything and the market is indeed right for a new store. And then we do working capital loans. Say you have some opportunity to bring on additional contracts, maybe a long-term care facility, maybe you want to expand into DME, maybe you want to do more compounding, maybe you want to do more business development and you want to bring on additional personnel. That would help. We can offer working capital loans for those type requests. So Wanda, feel free to chime in if there's anything you want to say along the way. Just interrupt me. That would be just fine. But
yeah, absolutely. Thanks.
Maybe you haven't heard of SBA financing and you don't know exactly who the SBA is and how they play a role in pharmacy loans, but this slide kind of speaks to a little of the details of how it works. So SBA, Small Business Administration, again, it's a government agency that has a lending program that banks can take advantage of. They do not lend the money directly. The money still comes from the financial institution, the bank. They just set out parameters and guidelines for the loans, but the bank still lends the money and services the debt. SBA partners with lenders to guarantee repayment of the loan. So it's almost like an incentive for banks to make loans where they wouldn't otherwise be comfortable making the loan. For pharmacy specifically, a bank might say there's not enough collateral there, there's too much need for working capital, we're not overly comfortable with making a loan without that collateral there, that dirt, that real estate. The SBA provides that basically guarantee that if a loan goes bad, most of the time it's 75%. So if you make $1 million loan, it happens to go bad, the government will guarantee 75% of that amount back to the bank, as long as everything is done accordingly with their rules and guidelines. It's very similar to a commercial loan, structured the same way. We can talk more about terms, and most of our loans are 10 years unless there's real estate involved. There's no balloon. It's a very competitive interest rate. And then, of course, we have PLP status. That's Preferred Lender Participant. That means SBA has deemed us essentially an expert in SBA financing, and they give us their stamp of approval to do everything in-house. We don't have to engage with them. We can do all the approval in-house, and that's very important when getting an SBA loan, that you deal with a lender that has that PLP status. Otherwise, that's kind of where the SBA might get a bad reputation, where banks are sort of fumbling over the requirements and they have to send it in, and then anything sent in to the government, as some of you may know, can be time consuming and it can be a frustrating process. But we try to streamline that. We know this industry and we know SBA to try to alleviate some of those headaches.
Yeah, Drew, I would also mention that I think one of the things we often hear is that people are a little bit afraid of or hesitant about SBA loans because they're difficult or they're cumbersome or all of those things. And, you were just pointing out the importance of working, with a preferred lender. And earlier you mentioned that one-on-one experience that, First Financial Bank will give to our customers. And those things combined really alleviate a lot of those barriers and a lot of the headaches that are associated with SBA loans. And so I know there may be somebody out there listening who says, "Oh, I've done one before, and and it was not the easiest, process." And I would encourage you to not let that be a deciding factor and talk to us about that, because we can absolutely make that process so much easier, probably, than what you've experienced before.
That's right. That's right. Usually the headaches come from the non-PLP lenders, which it just makes sense. If you don't do something all day, every day, then you're not going to be as proficient at it. So SBA, small business, what does that mean? What is considered small in pharmacy? And NAICS code is how businesses are coded, and each business code has a size standard. So for pharmacy, it's 30 million in gross revenues. So as long as your business is under 30 million, which I think NCPA says the average independent pharmacy has around 3.5 million in annual sales. So by and large, most pharmacies that we deal with on the community retail side are considered small and eligible to receive an SBA loan. Community pharmacy today, this is sort of a snapshot of probably a lot of what you already know, but maybe don't see it or haven't seen it in a while. But there's just under 20,000 pharmacies in the United States that are community independently owned pharmacies. It's estimated that 1,000 roughly will change hands every year. I've seen stats where there'll be 1,000 that sell out and close, but there'll also be 1,000 that start up every year. And so that number relative to how many independent pharmacies are in the United States has been relatively flat, and right around 20,000 pharmacies in our country. Like I said, average annual revenues right around 3.5 million, just under 60,000 prescriptions per year. Gross profit margin, with all the pressure and margin compression and DR fees, still right around that 21% range. We see higher gross profit margins if you're into other services like compounding or have a good front end section, or into DME. You could certainly be above that, or you certainly can be below that too, based on your payers and how well you manage your inventory. But on average, we see most independent pharmacies being in that 21 to 22% gross profit margin range, which is still enough to make a good living if you manage your expenses correctly. And then the right side of the slide is just sort of a pat on the back for how well community pharmacies do compared to chain pharmacies, and how patients really prefer the experience of going to an independent pharmacy over a chain pharmacy still. 53% of independent pharmacy customers said, "My pharmacist knows me by name," compared to 14% of patients that go to a chain store. They're just not known and greeted in the same way, and the customer service is not the same from a chain store versus an independent store. And I know you guys know that, but it's certainly true. Independent pharmacies get higher marks when asked about, was your prescription filled quickly? 41% versus 20% at a chain store. Also, independent pharmacies do a lot of consulting and shopping and trying to make sure that you are in the best financial position, as well as getting the right medication, working with you to get your drugs down to an affordable level for you and your family. The average owner for independent pharmacies for today is right around 62 years old, and each pharmacy owner averages about 2 stores. So that should tell you that there is a lot of opportunity out there on the horizon with an older ownership group that owns multiple stores on average that maybe need to sell their pharmacies, by and large, pharmacy owners want to keep their stores independent if they can. They get a competitive offer and they can make sense of it financially, which a lot of times you can, and you have the right lender, you can have some opportunities in the coming years to buy existing stores that may be coming on the market. So where would you go to look for opportunities to buy? How would you find out about these stores that may be for sale? Look no further than your wholesale account reps. They typically will have sort of a good pulse on their territory as far as who the owners are, where they are in their career, what their exit strategy plans may be, and you want to be known as a potential buyer for some of these stores that may be coming up for sale. And so taking those folks out for lunch, getting coffee, letting them know who you are is a great idea if you are looking to acquire pharmacies. Wholesale transition teams, those are certainly out there and provide good expertise and have good insights about what stores are available. But also, once you get a pharmacy that you're wanting to buy, helping underwrite it, helping through the due diligence process, making sure there's enough cash flow, making sure you make a smart buying decision, and make sure your purchase price and your negotiations are in line with what the business is worth on the open market. You know, there's a benefit for these folks that look at the same type business over and over and over again. They can get, like ourselves and transition teams, get a very good feel for how much pharmacies are worth. And you want to lean into that knowledge and expertise as much as you can. Don't be afraid to visit local independents in your area. If they don't know who you are and you don't know who they are, it's hard to make a deal work. So you want to make yourself known in your market of where you're wanting to buy stores. You can find struggling stores, aging independents, and then word of mouth relationships. Those are all ways that we've seen over the course of our time in the space of finding good businesses for sale. So planning to buy. If you are, let's talk about things that you may need to do on the front end. Where are you willing to acquire? What is your radius? Are you willing to drive an hour every day from your house? Are you willing to move? Are you only looking in your particular state? Are you looking in a region? Or are you willing to go literally anywhere to buy a good pharmacy? Those are things to ask and plan for. What are your target pharmacy requirements? How big are you comfortable with? How big of a pharmacy have you worked in the past? What's your experience been with high volume pharmacies? Is there a certain level that you're comfortable with that you think would be a good fit? And where are you in your career? Are you buying your first store? Or are you buying your third store? As you get into multi-store ownership, you really don't want to mess around with low volume stores. It's just not worth your time. You're only going to be looking at a lot of times high volume stores from what we see of a lot of our customers. And so it just kind of depends on where you are in your career, and some of that can help answer those questions. But do you have a team around you? What attorney would you use to help draw your transaction documents, your purchase agreements, your power of attorney? What CPA would you use once you are becoming the business owner? And even through the due diligence period, having a strong CPA that can evaluate the numbers with you and help you make an educated financial decision. What wholesaler are you going to use? Business partners, in addition to that, marketing companies. What pharmacy software would you plan to use? How familiar are you with that pharmacy software? And then, of course, financing. You got to have money to make deals work. How much cash do you have saved up? And what are you going to do for your banking partnership? So in that, as you're sort of identifying your criteria of what a solid purchase would look like for you, some things to think about personally. You want to make sure you have good credit, a good credit score, and a good, clean credit report. And it probably goes beyond just the credit score. You want to make sure that you don't have a lot of credit card debt. You want to keep your liabilities to a minimum. All of that goes into account. When we run our cash flow analysis, we run it on the pharmacy, which is called a business cash flow, but we also run a global cash flow, which looks at all of your personal debt, looks at how much personal income you're going to be making, and then how many requirements do you have? What's your mortgage look like? How many car payments do you have? Do you still have student loans, credit card debt, home equity lines, things like that? So you just want to make sure that's as tight and as under control as possible. Less debt, the better. Certainly you can have student debt. We understand pharmacy school is very expensive. And if you haven't worked, very long and you're not that far out of school, it's going to be there, and we're fine with that. But you can manage the credit card debt, and you can manage, what type of car you drive and things like that. So just keep that in mind. Obviously, you need to have a valid pharmacist license. Do you have to be a pharmacist to buy a pharmacy? No, we've done plenty of non-pharmacists where they're acquiring stores and that they maybe work there as a manager or have experience in their family, but you need to have access to one. Who's going to be your pharmacist in charge? That's something that the bank is going to ask. We're going to want to know what's that person's background, where have they been working. We're going to look at who the pharmacist in charge is going to be if that's not necessarily you. Do you have a passion and desire to own a business? That is certainly something you need to ask yourself, because it's not clocking in and clocking out. It's a different type of commitment, a different type of experience going to work every day when you are the business owner. A lot of people pulling at you, a lot of management responsibilities. And is that something that you want? And is a good time in the season of life that you're in? Have a good mentor. People that are in your area or people that you've met at trade shows in the past that are successful, that are sort of ahead of you. Lean on them and have them speak into your business and how they've done things, and create that open dialogue and relationship. Have some cash available for a down payment. That's a must. We'll go over this in a second at the end when we go through an example, but you have to have cash to buy a pharmacy or to start a pharmacy, which makes sense, but you just want to prepare for that early on. And then you just need to understand how pharmacies are valued and what that's going to look like from a negotiation standpoint, what the process looks like. We don't have to go over all that right now, but you want to make communication with people in the industry sooner rather than later, just so you have that roadmap of, all right, what do I do when I do find a pharmacy that is for sale? What do I ask for? What's my first step? How do I come up on a purchase price? All those things you'll want to sort of have a good handle on before you get started.
So, and Drew, I would just add right there that, we're talking about having a plan. And one of the things that can be so exciting is when a young pharmacist or, seasoned pharmacist is interested in buying, they do have a plan. They are prepared with all of those things that you talked about, and the perfect opportunity presents itself. And that's what I would say. When all of those things come together and you are prepared, when that opportunity in the perfect location with that perfect store at the right price, the right volume, when it lands in your lap, you're ready. And what we don't want to have happen is for that opportunity to present itself and you not be prepared. And so just like Drew said, it's important to think about all of these things way ahead of time. If that desire to own is in your future, you want to start planning now. Don't wait until the opportunity presents itself.
That's right. And we're more than happy to talk and have your number in our phone, so you are ready, and we're happy to provide any counsel that you may need well in advance to best prepare you for that time. So on the flip side, if you're planning to sell, what is your succession plan? Do you have one? Do you have an exit strategy? Have you identified a short list of people that could buy your pharmacy? If you want to keep it independent, as most do, you want to find somebody that is credit worthy, that has a good head on their shoulders, that maybe has worked in the store, that you think would be able to get a bank loan. You need to be able to show 2 years minimum of profitability. I understand there's some strong reasons to not show all the profitability from a tax standpoint when you're not ready to sell the business, but when you are, you need to shift gears and be able to show a prospective buyer that this pharmacy and this business does make money and is solvent. You want to have that same team, your attorney, your CPA involved, financial planner, because as you're selling, you will definitely have some tax implications, and there's strategies that you might want to employ when you're selling your business, especially in terms of seller financing and the ways that can help. Is retirement solely dependent upon the proceeds of the sale? If it is, then you want to do your very best to make sure your store doesn't look like an aging independent, that it looks like a vibrant independent. And you want to get out in front of that, not 2 weeks before you want to sell, but really 2 years that you should be planning for this. And then how the transition impacts your employees and community. You want to, independent pharmacies are such a big part of their community. In a perfect world, you want to see that that store continue on for many years to come as a mainstay in the community. So what gives you the best opportunity for that to take place? Seller planning, we talked about that. Are you educated? A lot of pharmacy owners, especially as they get into their late 60s, they think the business is worth what it was when they were 45, and it's just a changing marketplace, and there's a lot of different factors, and you just can't always emotional sellers and having a number in their head that may not be realistic based on what somebody can afford to pay for your store. The earlier we can get out in front of that and really hone in on some realistic expectations, the better. You need to understand the decision criteria for lending and approval. I mentioned having a short list of potential buyers. Are they creditworthy? But also, is your business creditworthy? Does it look good on paper? And is it profitable? How does your balance sheet look? How many liabilities do you have? Does it look like you're struggling and really leaning on a line of credit, or really leaning on credit in general to make it through month to month? Or does your business look strong and healthy? Things to consider: would you want to carry a portion? Say you want to sell your business for $1 million. Plenty of times, we'll have $800,000 that's given at closing, and then the seller will carry a note for $200,000 to make up that full purchase price. And of course, there's some capital gains tax that are deferred in that, because there's only that big chunk that's being received at closing. You're deferring some taxes there, and that may be a good strategy, but something you want to keep in mind. Do you want to keep working in the store? Do you want to work part-time, or do you want to just hand over the keys and say see ya? Either way, it's fine, but you just want to make sure that's communicated on the front end, so buyers know what type of involvement they'll have from you as a mentor as they look to transition the business with the community. And are you prepared, and have you prepared yourself for that next step? And then if you own the real estate, would you want to sell it all and do one big transaction, or would you want to have first right of refusal and sell it a couple of years down the road to whoever bought your business? Either way is fine, and we see both type scenarios, but just think about that from an exit strategy standpoint. So what type of pharmacies in the marketplace are attractive? And I'll just speak to the left side here, and it's kind of the opposite on the right side. You can read those as I go through it, but you want to be over 3 million in revenue. You don't want to be below average in size. Why? Because there's just not enough money to go around. Pharmacy is kind of a volume game. Like we talked about, gross profit margins are about 21, 22%. They're not 30%. So the way that number gets bigger and bigger is about having more volume. So just over 3 million is more attractive, certainly. Good profitability if they have other services that either are already in place or can be added. We talked about DME, talked about some group home, long-term care type stuff, but also compounding. Balance expenses, specifically payroll. You want to make sure a store is not overstaffed. The worst thing what you don't want to happen is have to come in there and lay off 3 pharmacists right out of the gates because the store's overstaffed. It's possible that could be the case, but that just doesn't get everybody off to the right foot and may hurt your transition, as some of your patients may love those pharmacists. And you want to make sure balance expenses are in place. A good staff, good location. Can you rely on them? Are they going to be there? Are they stable? How long have they been with the business? Is the pharmacy growing at all, or at least have some sort of stable growth? Or is the overhead reasonable in terms of your occupancy expense, rent, lease? You don't want to get in a situation where you're paying a really high rental rate and then maybe it increases every year. That would be unfavorable lease terms. That wouldn't be on the not attractive side. So you just want to look at that. There's a lot of things. What's the competition like? How is the store differentiate itself from the competition? All things to consider.
Yeah, and I think, Drew, you mentioned earlier that buyers need to understand pharmacy financial statements and benchmarking, but sellers need to understand benchmarking as well. And it's really important, as you said, to get all of your finances in order when you're preparing to sell. And one of those things is really being able to benchmark yourself against industry standards and know, how is my pharmacy going to look to a buyer and a lender, just like you mentioned. So, I encourage both buyers and sellers to really understand those benchmarking criteria.
Yeah, exactly. So what is the pharmacy worth? Well, what a buyer is willing to pay would be an easy way to answer that question. What a lender is willing to invest it is another way. But it's all dependent upon the buyer's ability to generate a future ROI. How long is it going to take for them to get their money back? Business valuations are certainly a part of our everyday life. And just like if you're buying a home, you're going to get an appraisal. If you're buying a pharmacy, there's going to be a business valuation by an independent third-party company, and they're going to value the pharmacy based on multiples, usually of how profitable the store is, EBITDA. But the pharmacy must enable a buyer to earn a market salary. Market salary for a pharmacist, 100,000 plus, 110, 120, 125, just depends on the market. But you want to make sure you can step into a salary, allow for debt repayment. The business needs to generate enough money to be able to pay a loan back. And then of course it's got to appraise and have a debt service margin of 1.3 or better. That doesn't mean anything to you, which it might not. You just want to make sure a 1-to-1 would be the pharmacy makes exactly enough money to meet all of its requirements from a debt and expense standpoint. So anything above a 1-to-1, there's excess, there's cushion. So a 1.3 or better, about 30% cushion. Obviously the higher the better, but we want to at least see 1.3 to 1 or higher on the business cash flow side. If you are performing evaluation, what do you need to gather? What does a buyer, an accountant, or a lender need to review to determine if the pharmacy is worth what you're offering to pay? You want to grab the year-to-date profit and loss statement and balance sheet. So for now, if you were just right this second, you would probably want to get 2022 first quarter financials. That would be a P&L through March 31st, 2022. So you can see how the business did from a profitability standpoint through the first 3 months of this year, and then a balance sheet dated 3/31/22, and you can look at cash, inventory, accounts receivable, liabilities, of course. Number 2 there on this slide is all pharmacy reports. We're going to look at the top 100 drugs dispensed to see what the pharmacy fills. We're going to look at generic versus brand. We're going to look at third-party payers. We're going to look at all these things and make sure that everything is in line. And then also we're going to ask for 3 years of tax returns on the pharmacy business. So you should be in that. We're in the middle of May. Hopefully the pharmacy has completed their 2021 tax return. A lot of times they haven't with extensions, but you want to try to get those as possible. And so you'd have 21, 20, and 19 tax returns that you would collect. It's been a weird last few years with COVID and stimulus money and doctors' offices being closed in 2020 and prescriptions not being out there and then slowly coming back. And then you got to really, 2021 should be a good picture. It was somewhat of a normal year. There certainly was a lot of COVID vaccines and opportunity for independent pharmacies. So even on 2021, if it looks abnormally profitable, that may be something to look at of how many vaccines did they do? How many antibody tests did they do? All those things can really play a part. And is that revenue and that profitability going to continue going forward, or that may drop off a little bit? But you just want to ask those questions, and it's certainly been a weird last few years, which makes it a little bit more challenging. But with all that information, we should be able to figure out sort of what the business is. So there's a few formulas out there. There's actually a lot of formulas. At one point, I read an article where there's 27 different ways to value an independent pharmacy. And we don't run all 27 of those. That's would be too much time, but we do use a multiple of cash flow specifically as our preferred valuation method. So EBITDA, earnings before interest, taxes, depreciation, and amortization, that's basically how much net income how much money the pharmacy makes and generates on the bottom line. And so you're going to take that number. Any add backs certainly can be if there's some insurance expense or country club dues or gym expenses or auto expenses that are not related to the business, we can add those back. But that's all going to go into an EBITDA number, and then we're going to use usually about a 3 multiple, where you take, say it's 300,000, multiply that times 3, that would be 900,000, and then you would add inventory on top of that. As the total value of the pharmacy. So that's quickly, and we'll walk through an example of how that's done, but that's the multiple of cash flow evaluation method. You can look at a percentage of annual gross sales in the 15 to 25% range. If you just want to do a quick rule of thumb, and then also you could do a dollar. This is more the chain method where you apply $1 per prescription annually. So somewhere between $10 to $20. It's certainly not $20 right now. That's definitely on the high end. It's probably more closer to 10 to 12 to 14. I feel like that chains are paying, but not something that we look at in much detail. But just to run through an example, hopefully you can follow this and the slide's not overwhelming for you. Let's just look at an evaluation example of an independent pharmacy. So this particular pharmacy does $4 million in total revenue, 65,000 annual prescriptions. So they're normalized. That normalized number means we added back anything that wasn't necessary for the business. So your EBITDA of 315,000 is basically how much money the pharmacy makes on an annual basis. So that 315 was made up of 145,000 was on the bottom line. Depreciation and amortization, which is a non-cash expense. So that was added back because it's in that EBITDA acronym. The owner paid himself a $50,000 annual bonus. So he was over market salary for a pharmacist. He had a delivery vehicle on his P&L, but wasn't used for delivery. It was more of his personal vehicle of $15,000. And then he had his wife on salary that didn't really do anything for the business of $45,000. So add all that back up, and that's where we got to the 315,000 of normalized EBITDA. Option 1 is the valuation method that we talked about. 315,000 times 3, which is about average multiple for independent pharmacies, equals 945,000 for the business, and then you add whatever the inventory is on the shelf at the time of purchase on top of that, and that would be your total purchase price. Option 2, if you were looking at a percentage of gross sales, 4 million times 20% equals 800,000 plus inventory. And then option 3, the $1 per prescription. Again, we won't spend too much time on that. So getting that into a purchase structure, are you going to buy their business entity, or are you going to create your own business entity and buy their assets? Asset purchases are definitely the most common, unless you're in states where contracting can be somewhat of an issue, and that'd be Florida, Texas, California. Some of those states, stock purchases are more common, just to go ahead and buy the business entity for that purpose. But the bank is SBA lender, such as First Financial Bank, would lend 90% of the total project cost. So we would loan 90%, and then we would ask buyer a combo. A lot of times it's just the buyer bringing 10% cash. You can do a combo of buyer bringing some cash and seller hold the promissory note on standby. But either way, if it's all buyer, if it's a combo of buyer and seller, providing that 10%, we have to have a 10% equity injection requirement. So if it's cash, then it'd be First Financial Bank lending 90%, buyer bringing 10% of cash. And so this is what the budget would look like. So we talked about the $945,000 of goodwill for the business. Inventory, third-party inventory report that was done the weekend before closing came in at $250,000. You needed $175,000 of working capital to run and operate the business. Then we had $30,000 of closing costs, which was an SBA fee and other closing costs to get the loan closed. 10% of that number would be $140,000. This particular buyer had 10% of cash to bring, and so there's $140,000 as the down payment. The seller note, we didn't need it because we got that 10% already met by the buyer's cash, and so the First Financial Bank loan would be $1,260,000. So that walks you through sort of an example. I know it's kind of hard to digest that probably virtually through a slideshow, but it should give you an idea of how that's calculated with total project costs, all the money needed to make a deal work, and then the bank's going to lend 90. Somehow we got to get 10% in equity. But acquisitions, do's and don'ts. Understand the business that you're purchasing. Don't limit yourself based on what's there. See the potential of what you could do with it. Like we talked about older sellers, a lot of times they haven't done everything possible to grow the business in the last 10 years. So there's probably some potential there, but don't pay for that potential. See it, plan for it, put it in your business plan, think about it, but don't pay for it. Know the current cash flow opportunity of the business and what the business will support, because all that can be bonus and extra and gravy, but you want to make sure that what you're buying and what you're getting from day one is supported by your bank loan, that you can pay your bank loan back. Expect the unexpected. It's the wide world of business. It's just anything can happen out there. And staffing. We've seen a lot of things where staff quits, or you can lose patience. Transition's not go so smooth. So just expect the unexpected. Budget and forecast future performance. Don't get into a bidding war. Be very disciplined. Understand the valuations, and just work with the right partners. And if you have the right partners, most of the time, between all of you, all those heads together, you can make a very sound business decision. So we got to the end of it. That's the end of the presentation. Hopefully you learned a little bit about First Financial Bank and SBA financing and how pharmacy deals typically are structured. I think we have time for questions. Schwanda, did you have anything else before we turn back over to Brandon and ask for questions?
No, I think we're ready for questions. Thank you.
Okay, sounds good. Great job, both of you. One question that we often get is, when is the right time to reach out to get a loan process started?
So I'm available this afternoon, Brandon. You can call me anytime. Never too early. We're easygoing, enjoy what we do. We like talking shop. So you can always email. And if you just have general questions, it may not be exactly the right time for you to be filling out a loan application. But if you just want to know, hey, I'm at this pharmacy, we do right around this volume. What do you think? What should I be doing right now? How can I prepare myself? We're happy to answer any and all questions whenever you have them.
Yeah, and I would just add to that, I would add, we do a lot of boot camps for not just pharmacists interested in ownership, but also for students, and investing a lot of time in encouraging that entrepreneurial spirit and interest in ownership, even in pharmacy students. And so just like Drew said, it's never too soon. We probably aren't going to send you the loan application to fill out today, if you're a student or a brand new graduate, but, it's not too soon to start thinking about that, gathering information and figuring out, how you can be prepared when the time is right.
Sounds great, Schwanda. Another question that we often get from our members is just how long does the whole process take to actually close out a loan?
Yeah, that's a good question. We get that question often as well. I would say around 45 days. If you want to, I got an opportunity to buy a pharmacy and I want to do it as quick as we possibly can, because I'm ready to go and I got all the information, I would say about a month and a half to 2 months, no longer than that. A lot of the time depends on how long it takes to get the purchase agreement nailed down. If both sides have representation and counsel, then those things can bounce back and forth and between the two lawyers and attorneys' offices and take a good little while. But if you have that, if you're pretty close on that, we can have our stuff ready to go, as soon as you get it back to us. But I would say roughly 45 days.
Gotcha. Okay. Any other closing thoughts? I believe that's all we have for questions. So any other closing thoughts from either you, Drew, or Schwanda that you think our members could benefit from?
No, just again, we're happy to be a resource anytime you may need us. Thanks again to IPC for having us. We appreciate the partnership and we appreciate you guys hosting. And it was a lot of fun to be here.
It was great having you, Drew, and as well as you, Schwanda, and a little bit of background. First Financial Bank has been one of our preferred kind of partners for a long time here at IPC. So, we as a cooperative trust their expertise. They've helped members for years. So please give them reach out to them if you are needing help financing your pharmacy, looking to acquire or sell. They're a great partner, and they'll be back with us in August for another webinar. They'll be doing a little bit more of a deep